Big update for the crypto market. A top Federal Reserve official just said the U.S. could see 3 interest rate cuts this year after weak job numbers. Why does this matter? Because lower rates usually mean more liquidity, and that's historically bullish for Bitcoin and Ethereum. Futures traders are already pricing in these cuts, and some analysts, like Tom Lee, believe Bitcoin could even double from here if the Fed delivers. At the same time, Ethereum's stablecoin supply has surged to $165 billion, showing stronger adoption in DeFi, while Solana continues to attract attention with its speed and low fees. But here's the catch. Some economists warn that cutting rates now could spark inflation or even another bubble, like the dot-com crash. So, the big question, are these 3 cuts the start of the next crypto bull run or a dangerous setup for volatility? Let's start with Bitcoin. Recently, Bitcoin faced strong rejection at a major resistance level near $113,000. Short term, that pullback scared some traders. But on the weekly chart, the bigger trend is still bullish. The super trend indicator remains green, showing we're still in an uptrend. However, we can't ignore the bearish divergence on RSI momentum is slowing. Support is holding around $106,000, while resistance remains at $113,000. Until Bitcoin breaks above $113,000 with strong volume, we should expect sideways or choppy action. Futures data shows large liquidity pools at $114,000 and $118,000, which could attract price in the near term. If those levels break, the next stop could be $125,000. Now, let's talk indicators. RSI has cooled down, which is healthy after the rally. MACD is flattening, suggesting we might see consolidation before the next move. This is classic bull market behavior, periods of sideways price before the next leg up. Question for you. Do you think Bitcoin will break $113,000 this week, or will it test $106,000 again first? Drop your thoughts in the comments. Now let's move to Ethereum. ETH is currently trading in a clear range between $3,900 support and $4,900 resistance. Until we get a breakout on either side, we remain in consolidation mode. But under the surface, Ethereum's fundamentals are strengthening. Stablecoin supply on Ethereum has now reached $165 billion. That's massive. More stablecoins mean more liquidity parked on-chain, which is fuel for DeFi, NFTs, and future rallies. Historically, when stablecoin supply grows, ETH demand follows. Key levels to watch: $4,300 as short-term resistance, $4,600 as a breakout level, and $3,900 as crucial support. As long as ETH holds $3,900, the long-term bullish structure is safe. Another thing to note is ETH versus Bitcoin performance. If ETH breaks out of its range while Bitcoin stalls, we could see Ethereum dominance rise. Next up, Solana. SOL has been one of the strongest performers in this cycle. The chart shows a clear pattern of higher lows and higher highs, a bullish structure. Right now, Solana is finding support around $200, with resistance near $230. As long as Solana stays above $190, $200, the bullish momentum is intact. Institutional demand is also helping. Big funds and DeFi projects are building on Solana, and retail traders are flocking to its fast transactions and low fees. One important point, Solana tends to follow Bitcoin's momentum. If BTC breaks out, Solana could quickly retest $250, $270. But if BTC stalls below $113,000, Solana may range sideways a little longer. Now let's talk XRP. After weeks of struggling, XRP has reclaimed the $2.90 zone, flipping it into support. This is a key level. Holding above $2.90 means the bullish setup is back on. The next resistance levels are $3.08 and $3.30. A confirmed breakout above $3.30 could send XRP into a much larger rally. But remember, XRP tends to move in bursts, long periods of quiet trading followed by sudden spikes. Legal clarity from Ripple's progress with the SEC also plays a big role here. With regulatory concerns easing, institutional players may feel more confident in XRP, which could fuel adoption and liquidity. Chainlink is another project to keep on your radar. Even though the short-term trend looks weak, the long-term chart shows a strong bullish uptrend. Support is holding around $21, and resistance remains near $24 to $27. Link's role in powering DeFi with oracles and the CCP cross-chain protocol is crucial. As adoption grows, Chainlink will likely remain one of the strongest altcoins. As long as Link stays above $20.21, the bullish macro trend is intact. So what does all of this mean for the market as a whole? The Fed is now expected to cut interest rates 3 times this year. Lower rates mean cheaper borrowing, more liquidity, and historically, that's bullish for risk assets like crypto. But there's debate. Some analysts argue this is the wrong time to cut, with inflation still sticky and energy prices high. Others compare today's setup to the dot-com bubble, where rate cuts fueled a massive rally, but eventually led to a crash. Will history repeat, or will crypto prove stronger this time? Studio microphone. The stock market, especially the S&P 500, continues hitting all-time highs, showing risk appetite is still strong. And some analysts are predicting a market peak around 2027, aligning with Bitcoin's halving cycle. If that's true, the next 2 to 3 years could be incredibly bullish for long-term holders. So the big question for you, will Bitcoin double from here like some analysts predict? Will Ethereum and Solana lead the next wave? Or will the Fed's decision backfire? Let me know your thoughts in the comments below. That's all for today's update. If you found this helpful, make sure to like this video, subscribe to the channel, and hit the bell for daily crypto updates. Thanks for watching, and I'll see you in the next one.